Warren Buffett is one of the richest people on the planet, with an estimated net worth of $115 billion, according to Bloomberg. Despite his massive fortune, Buffett pays relatively little in taxes. According to ProPublica, Buffett's true tax rate was a mere 0.1% from 2014 to 2018. Anyone can lower the amount of taxes they pay, even you and I. You don't have to be ultra wealthy to benefit from the tax code. It was written for people to use, and wealthy people know how to use it to their advantage. You should know that people who have normal jobs pay the highest amount of tax, but wealthy people earn their money differently and are taxed differently. Want to know more? Stay tuned and we're going to talk about it. This is Money Habits. I'm your host, Dr. Stephanie Aldrich, and I like to talk about money and habits that can help you improve your life. If you're new to the channel and like the video, please go below and hit the subscribe button and stay till the end so you can learn how to hide your money too. So we're going to talk about how the rich hide their money today. Number 1, they own businesses. People that own their businesses can deduct work-related expenditures. This means that business-related expenses like travel, a car, used for business, office supplies, materials, phone plans, and even utilities can be written off the bottom line. Remember that employees pay taxes when they get their paychecks, but business owners pay taxes after their deductions on the profit that's left over. And this can make a big difference in how much tax you spend and pay. I own 2 businesses. So one is my dental practice and the other one is a media company whose earnings from this YouTube channel and other investments, my books, my programs, that's where it runs through. And I pay less tax because I run all those profits through those 2 businesses. The second way that the rich hide their money is that they own assets. Certain assets are taxed differently than others. Stocks and bonds right now are taxed as dividends from either 0 to 20%. Of course, if President Biden gets reelected, he wants to raise taxes on dividends to 40%, which can hurt millions of retired people living off their retirement plans. Real estate earns income from the rents, but that income can be offset through depreciation of the asset over 27 and a half years. And you don't even have to own the real estate outright to benefit from the depreciation of the property. I invest in syndicated real estate deals, and because I am a partner with them, I get the same depreciation as they do, and I haven't paid any tax on my monthly income as of 2018. Energy, agriculture, and technology syndication deals also have the same advantage as real estate. They're written up in the tax code exactly the same way. I've even read on the subject that was written by Robert Kiyosaki's accountant, Tom Wheelwright, and he wrote 2 books. One is called Tax-Free Wealth, and the other one is The Win-Win Wealth Strategy. I've used both of these books to pay less in tax with my investments. If you invest a certain way, you get the tax benefits. And those 2 books I highly recommend if you want to learn how to hide your wealth just like the rich do. The third way that the rich hide their money is through trusts and LLCs. So wealthy people don't own anything. They own nothing in their own name. That way, if they ever get sued, they must go after the trust or LLC, which helps to protect their assets. An easy thing to do that anyone can do is to form an LLC through your state. Usually the Secretary of State has a formation business formation on their website. And for, let's say you're doing real estate, for each real estate property that you own, you should put it in an LLC. What I do is I put all of my investments through my revocable trust so that I don't own the assets, my trust does. Once you pay on your house, you can either set up a trust for your house that's controlled by a master trust, or you can set up a revocable trust that owns the house. You'll have to consult, obviously, with an attorney or even a tax accountant for more information. But basically, once you start buying and controlling assets, don't own them in your name. Form different types of trusts and LLCs that own them, and that will help shield you from any type of lawsuits in the future. The fourth way that the rich hide their money is through offshore accounts. Now, I'm not up on the offshore accounts kind of thing, so definitely do your due diligence with this. Wealthy individuals often use offshore bank accounts in countries with favorable banking laws to protect their assets from taxes and regulations. Countries such as Switzerland, the Cayman Islands, Singapore, Luxembourg, Hong Kong, Panama, and the Bahamas all have strong private banking structures and favorable corporate tax laws, where wealthy people can benefit from these laws by forming corporations in these countries. Of course, you must know what you're doing, so definitely consult with an attorney or banker that knows how to do this. And I don't know much about it, but I know that does help them hide their money. The fifth way that the rich hide their money is through life insurance. Private placement policies and whole life policies help to shelter money from taxes. These policies allow the wealthy to sink money into them and can pull money out tax-free at any time for any reason, both personal and for investment purposes. I myself am benefiting from this type of insurance as a hedge against inflation and even my own death to help protect my family. I'll have enough in my policy to pay me about 50 grand a year from the age 60 until I die. And then whatever's left over will be passed to my hubby and son to use tax free. And many wealthy individuals do that. They also do it on their high level executives just to give them opportunities to hide more money through their employees. The next area where the rich hide their money is in cryptocurrencies. Many wealthy people have invested in crypto. Right now, it's difficult for the IRS to track transactions, although they're getting better at it and are passing more and more regulations on it. But crypto is private. That's why they invented it. It's decentralized, so no one thing owns it or houses it. That's what makes it so attractive to investors. But a word of caution, crypto isn't being used as money like it was invented to be used for. There's nothing tangible backing it up, like a real estate company or real products and services. It only goes up because people are putting money into it to prop it up. It's a supply and demand thing. I don't have any because I like to own real assets that the government has written tax laws and loopholes about. That doesn't mean that in the future I won't, but right now, I like real assets. At any time, the government can regulate crypto and make it illegal to own or make it not so attractive, but it's definitely something to look into. The next area where the rich hide their money is art and collectibles. Again, I don't know much about this. I don't own any art and don't want my house full of collectibles. I like simplicity. But art and collectibles are an easy way for wealthy people to store money in tangible assets that are difficult to trace. The next area is charitable giving. Wealthy people can lower their tax bills by donating appreciated assets like stocks or real estate to charity and can avoid paying capital gains taxes on the appreciation of the assets and receive a deduction for the full market value of the donated asset. Anyone can set up a charitable remainder trust and give to charity what they want and also benefit from the tax breaks it provides. Of course, you need to talk to somebody that knows how to set those up for you and how it's going to affect your retirement plan in the future. The next way that the rich hide their money is that they max out contributions. This is one of the easiest ways that anyone can decrease the amount of tax that they contribute. Some retirement plans are after tax, meaning that the money that you invest in them are already taxed. And some plans are tax deferred, meaning that you don't pay any taxes on those investments today or this year, but when you cash them out in the future. Make sure you talk to your accountant and financial advisor to see how you can take advantage of these entities. The maximum to invest in a 401k in 2024 this year is $23,000 if you're under 50 or $30,500 if you're over 50 as a catch-up. Roth IRA's max for 2024 is $7,000 if you're under 40 or 50, and $8,000 if you're over. Then you have your health savings accounts, or HSAs, and their max for 2024 is $8,300 for a family. Maxing out both spouses can help to build wealth fast and save taxes at the same time, freeing up even more money to invest in other areas. So that's it for the show today. Thanks for watching. Which loophole are you going to use to decrease your taxes this year? Let me know down in the comments. And until next time, this is Money Habits.